Good afternoon and welcome to the market wrap for Tuesday, the 5th of May. And look, today it was another decline for the Aussie market. Not by much though, we were down by around 0.2%, but it still marked our 10th decline in the past 11 sessions. But in saying that, we're only down a little over 3% over that time frame. So it hasn't been a huge pullback for the Aussie market over those declines. It's been pretty modest moves lower most days, and we're currently hovering around about a 1-month low. Now, of course, the Reserve Bank was the hot topic of the day, and as widely expected, we did see the cash rate raised by 25 basis points to 4.35%. That's its highest level since December 2024, and that's essentially undone all the rate cuts that we got last year in 2025. Now, the decision was almost unanimous, with 8 of 9 board members voting to raise rates. Governor Michelle Bullock in her media conference talked about developments in the Middle East remaining highly uncertain, which just adds to global and domestic inflation. In fact, the word uncertain appeared 48 separate times in the statement. But remember, here in Australia, we already had an inflation problem even before the conflict began. But now, on top of that, the oil shock has complicated things immensely, and it's just added to inflation, which was, of course, already too high. So she said the board must get on top of inflation now so that it doesn't get away from us. Now, I think the key thing markets took away from this was that she said the board judges the current level of the cash rate to be a bit more restrictive, giving the board space to see how things pan out. And that potentially could signal that the RBA could potentially be in wait and see mode, and that could be why the Aussie market actually finished around its best level of the day. Of course, still down, as I mentioned, 0.2%, but not as much as earlier on in the day. Now, in terms of what's next for interest rates, it's probably hard to say right now what will happen from here. The board said it will be attentive to the data and pay close attention to developments in the global economy. In terms of market pricing, markets reckon there could be one more rate hike before the end of the year. But look, given how uncertain everything is, it could very well be on a meeting by meeting basis. And from here, the next RBA meeting is scheduled for the 16th of June. So 6 weeks for all of the developments to pan out. Of course, a lot can change in 6 weeks' time. At the moment, a lot changes in just a day's time. So we'll have to wait and see what the next 6 weeks bring, and that will likely guide the next decision in June. But look, back to today, it was fairly mixed across the different sectors. The tensions in the Middle East intensifying overnight did see oil prices jump to 114 US a barrel, with energy stocks following that lead in today's session. So energy was the best performer of the day, while we did see miners and bank being some of the biggest losers, of course, our 2 largest sectors. Today, there was also a bunch of companies hosting presentations at the Macquarie conference. In fact, we'll get more than 100 company updates over the next 3 days. So today, there was a lot of share price action on the back of these updates. One of them was Flight Centre. It was a fairly mixed update. Unsurprisingly, it said that its leisure business was disrupted by the Middle East conflict in April, estimating a profit hit of around $10 million that month, saying that more than 25,000 bookings were disrupted and 6% were cancelled, adding that its cruise bookings were also impacted. Its corporate business, however, saw very little impact so far, so it kept its profit guidance unchanged for the year, supported by a strong third quarter growth in corporate earnings. So I think the fact that despite everything going on, it still didn't impact its overall profitability. So shareholders were clearly surprised by that outcome, and that sent its share price higher in today's session. WiseTech also jumped after presenting at the Macquarie conference after maintaining its full year guidance, and Regis Resources unveiled a $10.7 billion merger with rival gold miner Vault Minerals, which is set to create the 3rd largest gold miner on the ASX. So today we did see Vault rise on the news. It was up 3%, but on the other end, Regis Resources lost ground, down by close to 6%. Australia's 2nd largest bank, Westpac missed half-year profit estimates. Magellan down 7% after announcing a major shake-up to its global equities fund. And tech firm Codan lost over 9% after a substantial shareholder significantly reduced their stake in the company from a little over 19% to 14.7%. Now, in terms of the Aussie dollar, it's actually been under a little bit of pressure despite that RBA rate hike today. So it's currently sitting at 71.4 US cents. Ahead from here, US futures are pointing to a fairly muted but slightly positive start when the US market opens up tonight. We do get a few economic updates out of the United States tonight as well, including services, job openings and new home sales. Looking to tomorrow, Rio Tinto will host its annual general meeting. We'll also get a couple of more quarterlies, and of course we'll be watching developments between the US and Iran very closely overnight and in the next coming days. Have a good night.